Yes, I need to be able to share my screen. Yeah. It, it says only the host can share in this meeting. Okay. Multiple shares. Okay, you should be able to share, and I will make you host. Okay. Okay, it's open now. Yeah. Okay. You should be able and your host. Okay. All right. So. Okay, good evening all. Are you able to hear me and see my screen?
Yeah.
Yes.
Okay, all right. I guess we can begin. Sorry about the late start, but I had a couple of technical difficulties there. Let's see. Okay, so I trust we are all well. I see 1, 2, 3 persons here today. Mr. Marshall, are you there?
Yes, sir.
Okay, okay, all right. Miss Knowles, and then I see Miss Heald. Need to make a note of who is here. Okay. All right, so last class, which was on Saturday, we were doing a chapter that was focused on algebra, and I think I got homework from one person for that, which I recorded. Now, the sheet that I shared with you with your grades, your scores, that's a live sheet. So as soon as I record something, you should be able to see it on your end. So you could just go to the email, or if you have Google Drive, you should be able to find it in your Google Drive. But other than that, you could just click on that email link that I sent you and you should see the updated. And if you have any queries about anything, you could always let me know and we could deal with it. Okay. So I also return the tests to those persons who redid it, test number 1B. And so what we did was to make an average of that test with your first test that you did to give the final score for test 1. Of course, you know your overall score is going to be an average. So even if you didn't do as well as you wanted to, the key thing is to try to make sure that as you go along, you make improvements so that your average will increase. Okay. And if you did well, try not to cause your average to go down. Okay. I notice a number of persons haven't been submitted the homework. The homework, even though the percentage is small, it does help in your overall average. And it also helps with giving you the practice. I know time in between classes can be a challenge at times, especially if you have other classes to do, but it is very helpful to make that special effort to get the practice. Were there any questions? Anybody had any issues with any of the questions in the homework?
Number 5, well, a part of number 5 and number 6, please.
5 and 6. Okay. So let me see if I can find that. You mean that's on page 139 or?
It was the last two questions. I know
The
that.
last two
The
questions.
last two.
Okay, all right.
Yeah,
Okay.
138 to 139.
Okay. 138 to 139. Okay, so for those two questions, let's look at number 5 first. Number 5 says Target sells pots at $30 and dishes $20 at the local store. On the 4th of July weekend, Target sales were 2,600. People bought 6 times as many pots as dishes. How many of each did Target sell? All right. So this is one of those questions where because you know which of the two is sold the least of, we use that to use the variable to represent that smaller amount. So it says people bought 6 times as many pots as dishes. So they sold more pots than dishes. So if you want to use, let's say you use Y to represent dishes. All right. So based on the fact that we're using Y to represent dishes, what would we use to represent the amount of pots sold?
Six. I know I got the first part. 6 times the $30.
Well, it
Which
wouldn't be,
is,
well, we wouldn't, we'd be using variables at this time. 6,
oh, okay. I guess you
yeah.
could say P.
Well, I was using Y, so I use Y for
Okay,
dishes.
wow, you have to continue. Okay.
So if you're using Y for dishes, what would be the amount of pots sold? It says people bought 6 times as many pots as dishes. So how would you represent the amount of pots sold if Y equals the amount of dishes sold? Hello?
What did you
Oh,
say?
6Y.
sorry.
6Y.
6Y. 6Y.
6Y equal number of pots sold. Okay. So now it says it doesn't tell you how many pots were sold or how many dishes were sold altogether, but they told you that the pots are sold for $30. So the pot sales would be $30 times the amount of pots sold. So it would be 30 times 6Y, and the amount of dishes, the cost of the dishes is $20. So the amount of the dish sales would be 20 times Y. Okay, so we are just using variables to represent what we know. We don't know how many dishes were sold. We don't know how many pots were sold, but we know that whatever you choose to represent dishes, the pots would be 6 times that, and that's why we have 6Y. We know that the pots was being sold for $30. So if 6Y is representing pots, then 30 times 6Y would represent the amount of the sales for pots. And if dishes we are representing with as Y, then the dish sales would be 20 times Y. Now, based on what the question tells us, it says the total sales for dishes, the total sales were 2,600. So to get total, what do we do? We're gonna do what with those amounts that we have there?
We're gonna add
Okay, so it's gonna be 30 times 6y,
it. That give you
plus
180.
20
Oh,
times y, and that's equal to 2,600.
yeah,
So when you multiply 30 times 6y, you said 180. 180
yes.
y plus 20 y equals 2600. So altogether, that was going to give us 200y equals 2,600. So y now would be equal to 2,600 divided by 200, which is going to give us what?
13.
13. So that 13 now is telling us what?
That tells us the amount of pots Target sell.
Well, what is y representing at the top?
The dishes.
The
Right.
dishes, sorry.
Right. So y would tell you they sold 13 just dishes. And so how would we find out how many pots were sold?
Times it by 6.
6 times 13. Okay. So that represents dishes sold. And then when you multiply 13 times 6, or 6 times 13, which gives us how much?
78.
78.
78. So 78 pots were sold. That's what the question asks for. Is how many of each did Target sell? Okay. Yeah, so just wanted to know how many of each that they sold. And we go from there. Okay. So that's that. So let me see. Okay. All right. So 13 and 78, that's what we had there as our answer. All right. So in the next one, question number 6, a local Domino's sold a total of 1,600 small pieces at $9 each, I guess, and pasta dinners at $13 each during the Super Bowl. How many of each did Domino's sell if the total sales were $15,600? Okay. So in this case, you don't know which of the two they sold the least of. They didn't tell you that in the question. But in the previous class, what suggestion did the book give you in terms of deciding which one to use for the variable?
I think it was the largest number. The largest figure.
Okay, the more expensive one, you would use the variable. You could use the cheaper one, but it just that you end up with more working. So the more expensive one was the pasta dinner. So if you use, let's say we use W equal pasta dinner. All right. So if you use that to represent pasta dinner, how can we figure out how many pizzas were sold? How could we represent the amount of pizza sold? How many?
9W?
Did they say nine? Did they? We're looking at question
I
number
mean, no,
6.
sorry.
Yeah.
It's 1,600.
1,600 we have to do something with that 1,600. Well, that
I don't know,
1,000,
that's why I was lost on this question.
yeah, the $1,600 is telling you that altogether they sold 1,600. It says they sold a total of 1,600 small pizzas and pasta dinners. So altogether, that's how much they sold. So if you're using W to represent pasta dinners, how would you find out how many pizzas were sold?
Subtract it by
Okay,
W.
you're gonna have to subtract the amount of pasta dinners from the total. So you subtract the W, and that will tell you how much pizzas were sold. See, we're just representing this algebraically now. So if we choose the more expensive one was pasta dinner, so we're using W to represent that. And since we know the total sales altogether was 1,600, if you take away W from 1,600, that will tell you how many pizzas were sold. All right. So now they're saying to us that the pastas were sold for $13. So 13 times W would be equal to pasta sales. And the pizzas were being sold for how much?
$9.
$9.
$9. So 9 times 1,600 minus W would be equal to pizza sales. Okay, so these are the two things that we're going to be using to form our equation. 13W plus the 9 times 1,600 minus W. Altogether, that would add up to 15,600. So the 13W plus 9 times 1,600 minus W is equal to 15,600. Okay, and once you set that up, you go ahead and you remove the brackets. So 13W plus, what is 9 times 1,600?
14,400.
14,400 minus 9 times W will give you 9W equals 15,600. All right, so we're gonna have 13W minus 9W equals 15,600 minus 14,400. Okay, now 13W minus 9W gives you,
4.
okay, that's 4W equals, when you subtract 14,400 from 15,600, you get what?
1,200. 1,200.
1,200?
Yeah.
1,200. So W then would be equal to 1,200 divided by 4, which gives you
300.
300. So what is that telling us then? That W tells you what?
There are 300 pasta dinners.
300 pasta dinners were sold. And then if you want to find out how many pizzas were sold, what would you do?
1,600 take away the 300.
Which gives you
1,300.
1,300. So the question, what did the question ask? It says, how many of each did Domino's sell? So they sold 300 pasta dinners, and 1,300 pizzas, based on our calculation. Okay. So that's it for number 6. All right. So if you did the homework, take a photo or something and send it to me so I could give you the credit for doing it. And we're going to move on now to this chapter. Chapter 4. We were supposed to do chapter 4 and 14, but we'll see how it goes. Chapter 4 deals with some basic banking principles. And in your book, if you have the book, it starts on page 91, what we're going to be looking at today. All right. So it starts off by looking at the checking account. And I guess all of you should have a basic understanding of what a checking account is, even though less and less of that is being used now for personal purposes, but businesses still find it useful. And what are some of the pluses with a checking account? Anybody want to share some advantages of a checking account?
You can write checks.
Write checks, but what advantage does it have as far as in accounting, for accounting purposes? What is a good thing about a checking account versus paying for everything by cash?
I think that it's a good way to keep track of the things that you do.
Okay, yeah, it's a good way to have a paper trail for transactions that are done. Yes. And what is a disadvantage of the checking account? Compared to, say, cash or using a card system like a debit card or...
I think that a disadvantage is that the funds don't come off right away. So you kind of like have to make sure the money is there
Right.
for when the check clears.
Okay. So a lot of companies are now not allowing the use of checks because it's one of those systems that people sometimes can fraudulently get funds from businesses. It's fairly easy to forge, and also the monies are not available immediately when you use the checking account. But for many government operations transactions, it's a more secure way in the sense that you can get good paper trail for the transactions that you do. Okay, so structure of a check, of course, this is in your book on page 93. They give you a sample structure. Of course, it varies from bank to bank, country to country. Okay, so the key things is you have the date, you have the company that a line for the person who the check is to be made out to. You have the amount in figures as well as in words. You have the name of the bank, and most banks will have a little section there to indicate what the check is written for. In this case, you see they have it here, office equipment, but that's optional. Not every check have that. Then, of course, you have a signature line, and generally you would have the checking account number somewhere at the bottom, and also the check number would be located somewhere either at the top or the bottom or in both places. And of course, some other identifying markers that you see here may be optional. It varies from bank to bank. Okay, but those are the main parts of the check. So with the checking account, we also have the check stub. Of course, some banks, their checking books don't necessarily have a check stub. They'll probably have duplicates of the check rather than a check stub. But of course, some duplicate or a stub is useful to record or have a record of the transaction. And then, especially for businesses, banks also provide deposit slips. And this sample deposit slip is just a sample because it varies from bank to bank. And yeah, so in this sample here, it's a very basic sample, okay? I guess some of you work at the banks. What's missing from that sample deposit slip that we typically see on a deposit slip? Anybody?
I don't see a spot for a signature.
Okay, yeah, normally you would have an initial for the depositor. One other thing I see, what about the cash breakdown?
I know it normally has a cash breakdown where you have to put how much of each bill you have, and then the
Right.
total number, and then the checks is also separate.
Right. So most of the deposit slips will have a breakdown for cash, for in the Bahamas, it would be US cash, Bahamian cash, and then checks. So you'd have separate sections for you to list each, okay? So as I said, this was just a basic example. Okay, in this here, we are looking at how the check is completed. So they give you on page 94, going to 95, they give a little example. It says, complete the following check and check stub for Long Company. Note the $9,500.60 balance brought forward on the check stub. And then you must make a $690.60 deposit on May 3rd and sign the check for Roland Small. Okay, so that one at the top is done for you. And so we want to look at the one below and see if we could follow that pattern. And let us first look at the check itself before we deal with the stub. So it says in the bottom, it says, we're looking at the bottom section here, complete the following check and stub for Long Company. Note $10,800.80 balance brought forward on the check stub number 113. And you must make $812.88 deposit on May 3rd, signed, blah, blah, blah. All right, so normally we start off with the date. So what date is on this check?
July 8, 2013.
Okay, so it would be July 8th, 2013. And who are we paying this check to the order of?
Lowe's Corp.
Okay, so it's going to be Low, C-O-R-P. And the amount of the check is
$79.88.
79.88, 79.88. And of course, we're going to write that in words. So we're going to put 79 and 88 over 100. And what is this check for? What are we going to put as memo?
Advertising.
Okay, so we're going to put advertising. And then we sign for Mr. Small, so R Small. Okay, now on this check stub itself, we indicate how much money was deposited, was written on the check. So we'll put, in this case, we said it was 79.88. So put that here, 79.88. And we put the date to July 8, 2013. And we indicate that it was for advertising. Space a little small here. Sorry, advertising goes here. And then the check is written to Low Corporation, L-O-W-E. While we could make a mistake on the stub and cross it out, of course, we can't do that on the check unless we get it initialed by the signatories. And then the amount deposited, we had a deposit. How much they said was deposited for this particular? How much was deposited?
$812.88.
Okay, 812.88. So you put that there. So altogether, with the deposit and what was in there before, how much should be in there now when you add those two together? Any calculators going? $10,880 plus 812.88.
$10,882.68.
10,000. We're adding
Let me
$10,800
do it again.
plus
I got
812.
$11,613.68.
Okay. You're adding the 79.88 to the 10,800. Is, we're adding the deposit to what was there before. The balance was $10,800.80, and you made a deposit of $812. So you're looking to see how much money should be in the account. So altogether, that should be 11,613.68. And then the amount for the check was 79.88. So what you're going to do with that 79.88 to find your balance forward?
Subtract.
You're going to subtract. So when you subtract that, that will tell you how much your balance should be in the account, and subtract that and tell me what you get.
$11,533.80.
And 80 cents. Okay. All right. 11,500 and what?
$33.80.
80 cents. Okay. All right. So basically, that's how you would fill out a stub. Now, of course, the stubs vary. So depending on how it's set up, that will affect how you fill it out. But essentially, it gives the information that's on the check. And then oftentimes persons want to keep a running total of how much was in the account. If you made any deposits, you add it to that, and then you subtract the amount from the check. So you could have a running total of what your bank account should have. Okay. All right. So in page 94, they talk about endorsements for checks. And so your endorsement basically is an indication of how secure you want your check to be as far as the person's been able to cash the check. And so we have a kind of open type blank endorsement. Sometimes people, instead of writing a name there, like Low Corp, they'll just put cash. So whoever have the check could cash it. Okay. Then you have the full endorsement, which basically you would put the name of the person to whom the check should be paid to. And then to make it even more secure, you have your restrictive endorsement. Okay. And here they said it's the safest form endorsement for business. Gracie stamps the back of the check so that this check must be deposited in the firm's bank account. All right. What else can we do to restrict the endorsement? What's normally done here to force them to have to deposit the check? Anybody aware of it?
You can repeat the question, please.
Yes. The last form of endorsement they mentioned is the restrictive endorsement, which is going to require that the person who has the check has to deposit it rather than cash it straight off. So what can you do to a check to indicate that you want it to be deposited?
You put deposit only on it.
Okay. Well, something else I see them do is put this like two
It's
lines.
stamp at the back. Oh,
Okay. So we could put a mark across like that double line, or like you say, for deposit only. Okay. But in order to limit, to ensure that the check can only be paid to the company that who is written for or written to, and force the persons to have to deposit it. Okay. Now with your accounts, particularly your checking account, we every so often, usually on a monthly basis, we expect statements from the bank, because even though you may be trying to keep a running total of what you have in the bank, it is likely that you will not be able to be exact with your recording, because there are some things that may occur at the bank, but that you might not be aware of, to include in your checking account stub. So what are some of those things that the bank transactions that the bank may perform that you might not be aware of until you see your bank statement?
Banking fees, taxes.
Banking fees, taxes, definitely, yes. The VAT and the monthly fees, okay. So those for sure you wouldn't see. And then of course, sometimes you have payments that may come in to your account, or you might have payments that go out from your account on an automatic or on a regular cycle. So even though you know it should come out, uh, you're not definite until you actually see it on your bank statement. Okay, so this is just a sample bank statement. Of course, again, it varies from bank to bank, but in this particular uh, bank, they have a section for all the deposits. Then they have a section for the charges, and they have a section where the checks are shown. And then they have a section here which shows like a running balance. Okay, so that's one format that could be used. Some banks just put everything in a in one line. They just put all the transactions, just arrange them by date. So if a deposit comes on a particular day, then the next might be a check, then the next might be a charge, and so on. They just put all in one column and just organize them by dates. Okay, and then in some cases they classify them according to the type. So this is just a sample, it varies. Okay, now businesses and I guess some individuals also keep a a check register at times, so you could keep track of your written checks. So it's like a expanded version of your stub. Okay. So basically, each transaction that you make, you record it on a sort of on a register. So in this case, we have the first column for the check number. The second column records the date. The third column records the transaction. And then we have two columns representing whether you are making a payment or you are making a deposit. So the left would be for payment, which they refer to as debit. And when you make a deposit, they refer to it as a credit. And then, of course, payments are added and, sorry, the deposits are added and payments are subtracted. So in this first line that you see here, you have a deposit on the 4th to the 3rd, and the deposit was how much? See if you're following me. How much was the deposit on the 4th? $2,000. Okay, so at the very top, you have your opening balance of $12,912.24. And when you make that deposit, because it's the deposit, you're going to add it. And so your new balance would be $14,912.24. Then on that same day, you made another deposit of $224. So you're going to add again to get your new total of $15,136.24. And then on the 8th of the 3rd, you wrote a check number 633, written for Staples Company in the amount of $6,000. So because you are actually making a payment now, this is going to be debiting your account. So you're going to subtract that 6,000 right in this line here from the 15,000. And so your new balance is $9,136.24. And so you continue that process. And usually, you know, a lot of companies who do this check register, they would have like a monthly cycle. So you record everything for the month. And at the end of the month, you put your total, your ending balance. And then the next month, that ending balance would become the opening balance. And you continue the process each month. Okay. So we're not going to go through the whole thing, but just to show you the process of the keeping the check register. So we're going to look at one here now, which is just do a couple of them, a couple lines from this, just to go through the process. So this is on page 105 of your book. It says, fill out the check register that follows with this information. And so this check register is starts on July 7th. What's the opening balance for this check register?
$4,500.75.
So the first transaction is, tell me what the first transaction is.
That would be
A debit check.
Okay,
July
you're writing
7th,
a check, and that check number is,
482.
okay, so check number 482. The date is the 7th of July, 7JUL, and we are making a payment to AOL. Okay. And since it is a payment, you would put it in the column for payment. So in this case, it would be $143.50, 143.50. And so because it's a payment, you're going to subtract the 143.50. And so what will be your ending balance after that transaction?
$5,357.25.
Okay, 4,000, said 300 and
And $57.25.
25. Okay, so that would be your balance there. And so now you're going to look at the next transaction. The next transaction is another check. Okay, so you go to the next section, and that's going to be check 483 that was written on the 15th of July. And that was written to whom?
Staples.
Okay, so we put Staples. And the amount on the check is,
$66.10.
okay, 66.10. So because you're making a payment, you're going to end up subtracting again. So it's minus 66.10. So your running total at this point is going to be
$4,291.15.
okay. And then we'll just look at this last one and then we stop and move on, because you should get the picture. So in this case, now we have a deposit. So the deposit, and that was on, we don't have a check number for deposit, so we just go to the date. The date for that was the 19th of July. And we just put deposit here. And so deposits would go on the credits, on the credit side. And this deposit was in the amount of $800. So you put your 800. And so because it's a deposit, you're going to add plus 800. Okay. And so what's going to be your new total with this deposit of 800?
5091.15.
5091 and 15 cents. Okay. All right. So we would continue with the process, add, subtract. If you have to make a payment, if you're writing a check, you'd subtract. If you're making a deposit, you would add until you get to the end of the period. And that would be your check register for that period. Okay. Okay. All right. So now, another process involved with banking is to reconcile the bank's statement with your checkbook account or register. And we mentioned before that there are some things that your bank statement would have which you would not know until you see that bank statement. And so when you see your bank statement, then you can reconcile your records on your checking account with what your bank statement says. And the aim is to ensure that there is a balance between the two when you are through. Okay. So there are some transactions that are not recorded in the checkbook, like fees and taxes and so on. And sometimes you may make a transaction and it wouldn't be recorded necessarily in the bank statement at the time when you get your statement. So you have to do some additions and subtractions to ensure that there's a balance for the time period that we are looking at. And so that process is referred to as bank reconciliation, and businesses and individuals, well, primarily businesses, engage with that on certain regular intervals, usually monthly. Okay, so on page 97, you will see some of the transactions that are taken into consideration when you have to do your reconciliation. So it shows what's added, what's subtracted. So on the checkbook side, you have electronic funds transfer, as money transferred to your bank electronically. You wouldn't see that on your checkbook record. You would see that only when you get your statement. Then interest earned. Well, these days you don't get much of that, but whatever is there for interest, you wouldn't see that until you get your bank statement. Okay, notes collected, that's monies paid into your account for whatever reason. You may have some arrangement for monies to be paid into the account from persons who make credit from you, or for other earnings that you may be getting from other companies. If you have, for example, some kind of investment and you decide that you want the money to go straight into your bank account, then that would be example of note collected. Or you could have direct deposits. Okay, ATM withdrawals, you wouldn't see that in your checkbook either. So that you would see on your bank statement. And you notice that ATM withdrawals and automatic withdrawals, you might have a regular standing order, automatic withdrawals, those are subtracted, whereas the deposits, interest earned, those are added. NSF, that's related to checks that bounce. Of course, you'll have a fee for that. So that's a subtraction from your account. Online fees and, well, automatic payments. Yeah. And then they put an asterisk there and they mention things like utility bills, mortgage payments, insurance. You could have those on some kind of automatic payment system. Overdraft fees. Okay. Service charges, stop payments, and then you have bank errors. So those are all, well, those are some of the main things that will appear on your bank statement that you wouldn't know to record in your check register or your checking, your reconciliation until you see a bank statement. Now on the bank side, the only, well, two main things will be any deposits that you would have made that's not yet reflected in the bank statement. Because sometimes when you get the bank statement, if you made a deposit after this, it wouldn't reflect on the bank statement. And sometimes persons that you write checks to may take a while before they deposit it, or it has to go through the process. And so that might not be reflected on your bank statement. So if you have a check that's still outstanding, you would subtract it from your bank balance. And if you have a deposit that should be on its way into the bank, you would add it to your bank balance. And of course, if there are errors, it depends on the type of error. In some cases you add, some cases you subtract. All right. So when doing the bank reconciliation, I often focus on this side first because it's very few things. It's mainly just the deposit in transit or the outstanding checks. And for the most part, the rest of items would be in relation to your checkbook balance. So we look at page 96, 90, I think it's page 96 in your book. They make reference to the bank reconciliation process. All right. So they have a 5-step process mentioned there. Let me see which page that's on, page 98. Yes. All right, so you have your beginning balance, then you total all your account increases. Each time the bank increases the account amount, it credits the account. Total all your decreases. Each time the bank decreases an account, it debits the account. Find your ending balance. Okay. And then they have the steps mentioned here. Now we'll look at the steps as we go through an example or two. Okay, so here we have a sample, which is on page 101 of how a reconciled statement could look. So the company name and date is at the top, and statement as to what this is, bank reconciliation. On the left-hand side, we have the section that deals with the checkbook balance. On the right, we have the bank balance. Okay, so for each section, we're going to start off to say what the balance is. So on your checkbook balance, this person had $6,588.42. On the bank side, bank statement, they had $11,863.02. So the two are not equal. So the process of doing your bank reconciliation is to get two sides to be equal by finding out what is missing and causing them not to be equal. So your checkbook is showing that you have $6,588.42, and your bank account is showing that you have $11,863.02. So you're going to account for the difference. And that's the process of bank reconciliation. So when you go through, in this case, what they did all the additions first for the checkbook side. So these are things that you saw on your bank statement that was not recorded in your checkbook. So you have a electronic funds transfer, $1,808.06. You have another one for $4,000. Then you got interest for $56.02, and then some overstated error for a check, $720. So altogether, when you add all of these, your total is $6,812. You add that to the balance you started off with to get this $13,400.50. Then you're going to subtract, you do all the subtractions together. So you have your service charge, $28.50. You had a check that bounced, they charge $104, or maybe the check wasn't cleared. Okay, you submitted, but it wasn't cleared, so $104. And then you have a payment here for health insurance, $722. And so these three all together add up to give you the $854.50. And so because these are charges, you're going to subtract that from the 13,400, and that gives you $12,546. So on the other side now, you started off with 11,863.02, and then you had a deposit of 3,000, which was not recorded in the bank. So you have that added to your total, your opening balance, which gives you 15,246.28. And then you list all the checks that you wrote that's not showing on the bank statement. So you have check 638, 639, 640, 641, 642, and altogether those checks add up to $2,700.28. So when you subtract those from your bank balance, because those checks have to be paid, so you have to account for the payment for them. So you subtract that from the 15,000, you get a ending balance of $12,546, which makes the two sides now balanced. So you have accounted for the differences, and they're now in balance. Okay, so let's look at another example, and I ask you to do one. So in this case, you have this person who's Rosa Garcia received her February 3rd, 2013 bank statement showing a balance of $212.80. That's not from the bank statement. Rosa's checkbook has a balance of $929.15. The bank statement showed that Rosa had an ATM fee of $12. Okay, so let's just go straight to the bank balance is right here, $212.80. The checkbook balance, $929.15. So that's where we start. Then it says ATM fee of $12. So that's here. Now, in this book, what they try to do is keep all the items that you're going to subtract together, keep all the items that you're going to add together. So this ATM fee is what we have here, $12. And a deposited check return fee of $20. So that's a fee because there's a check return. So that's where that $20 is. Rosa earned interest of $1.05. So that's going to be added. She had 3 outstanding checks. So outstanding checks and deposits in transfer would go on the bank balance side. Okay. So basically we have accounted for all of the issues with the checkbook balance side. So she earned $1.05 interest. So you're going to add that to the $929.15 to get $930.20. Then you have 2 items that are going to be added, the 20 and the 12, which would be 32. You subtract that from the 930 and you get 898.20. Okay, so that's your ending balance on the left-hand side. And then here, it says now, she had 3 outstanding checks for check number 300 for $18.20, check number 302 for $38.40, and check number 303 for $68.12. So altogether, those 3 checks add up to $124.72. Then it says a deposit of $810.12, which is right here, was not on her bank statement. So you're going to add that deposit that is in transit to the opening balance, which is 212, so you get 1,022. And then the checks that are yet to be cleared, you're going to subtract that from the 1,022, and you end up with the 898.20. And so that's now balance reconciled. Okay. So we move on then to look at this one, which I want you to attempt. Look, just we have it already set out basically. So I want you to let me see if I could. Mr. Marshall, you want to read that question for us, please? And then I'm going to ask other persons to.
Earl Miller received his March 8, 2019 bank statement, which had $310 balance. Earl's checkbook has a $1,210 balance. The bank statement showed a $15 ATM fee and a $30 deposit check returned fee. Earl earned $24.06 interest. He had 3 outstanding checks, number 300 with the amount of $22.88, number 302 with the amount of $15.90, and number 303 with the amount of $282.66. A deposit for $1,250 was not on his bank statement. Prepare Earl's bank reconciliation.
Okay, thank you very much, Marshall. All right, Miss Roll. Hold on. Oh, Miss Roll, you join us later.
Hi.
Yes, ma'am. I didn't see you earlier.
Yeah, I joined. I joined at about 6:30, the little after.
Okay, Miss Roll. Okay. So let me see. Matia knows beneath. Okay, Ms. Roll, you want to start us off with this? Let's look. Tell me what the two balances is supposed to be: the checkbook balance and the bank balance.
Okay, so the checkbook balance should be the 1,200.
Okay, so we're gonna have 1,200.10. Bank balance.
And the bank balance is you $310. I mean $300.10.
Okay. All right. Thank you. All right. Ms. Knowles, on the checkbook balance side, what are the amounts that you're going to be adding and subtracting?
Say that again for me, sorry.
On the checkbook balance side, what are the different things you're going to be adding? What are the different things you're going to be subtracting?
Oh, the interest of $24.06.
Okay, $24.06. Okay. And then, so you're gonna
$15 ATM fee.
okay, ATM fee for $15. Okay, if that's fee, $15. Okay.
The $30 deposited check return fee.
Okay, that's $30. Okay. No,
Interest
all
given a funding. Oh, yeah.
okay.
That's it.
So when you subtract the 24.06, what you're going to end up with? Sorry, not subtract. You're going to add the interest. Sorry, what you're going to end up with?
$12,024.16.
Okay, 1,224 and
I
16.
mean, sorry.
Okay. All right. Oh, what I did here now. Okay. So, okay, that's 1,002. Okay, and then when you, what's the total of your deductions?
$45.
45. Okay. So when you subtract that from the 12, 24, 16, what do you get?
$1,179.16.
1,000. Say that again?
1,179
Mm-hmm.
and 16 cents.
Okay, 16.16. Okay, thank you. All right. So now that was Miss Knowles, right?
Yes.
Okay, so let's hear from Miss Heel now. Let's do the other side.
Hi.
Mm-hmm. So
So
we have any deposits in transit?
$1,200.50.
Okay, 1,250. So what would be your total when you add the deposit in transit along with the bank balance?
$1,560.
Okay, and then what deductions we have to make from the bank balance?
Check number 300 for 2280.
Mhm.
Check number 302 for 15.90. And check number 303 for 282.66.
So the total for those withdrawals is how much? For those checks, I should say.
321.36.
Okay, and now we're going to subtract that from the $1,500.60.
Something ain't right.
What you got?
1,179.24.
So we're off by a few cents. So where did we miss out on those cents?
I see. You have
Mhm.
22.80. It's supposed to be 22.88.
Okay, 22.88. Okay. So this would be 321.
44.
Okay. So when you subtract that from the $1,500.60,
$1,179.16.
okay. Okay. So we now have the account balance on the two sides. So we have reconciled. Okay. So essentially then we want to account for any outstanding checks and deposits in transit on the bank balance side, and then anything on the bank account that's not shown on the checkbook balance, we'd record it on the checkbook balance side. Some things you have to add, some things you have to subtract, and then your account should balance once you have accounted for everything in the appropriate place. All right, so I'm going to give you a couple minutes to roughly work this one out. It's very wordy, but a lot of the words don't really apply. So it says the World Bank forecasts growth of world trade to be 4.7% in 2012, down from 12.4% in 2010. This change has caused Peru's apple blossom florist to analyze its current financial situation, beginning with reconciling its accounts. Apple Blossom received its bank statements to show a balance of 8,000. So all of this portion here, I guess you could basically ignore. So you're going to start right here by saying what the opening balance is for the bank statement. Then it has a checkbook balance of 15,252. Deposits in transit. They have two deposits in transit here. There's a service charge of 45. Interest earned $3, notes collected, total 1,575. Outstanding checks, I give you 1, 2 outstanding checks. Okay, and you have to do the reconcile. So I give you a few minutes to work that, and then go on. So I'm going to call on different persons to answer different parts of it. So let's start working on that. Take about 5 minutes the most. All right, so we should be done. Are we through?
Yes.
Yes. Okay. Um, Miss Roll, what's your reconciled balance?
Yes, calculating now. 1 minute.
Okay.
Okay, for my check, 1 minute. 15, 210. So my checkbook balance
Mm-hmm.
is 15,210.
You mean at the end, the very end?
Yeah, you want me to?
Okay, so tell me what you did on that side.
Okay, so I added the interest.
What you started off with.
Okay, so I start off with my checkbook balance, which would have been 15,252.
Okay. And then next.
Then I added the interest of $3.
Okay.
And then I subtracted the surcharge of 45.
Mm-hmm.
And I added the notes collected for $1,575.
And you got how much?
Oh, wait, let me see something. Hold on. Let me
I mean,
just.
you did the right thing based on what you said, but I'm not sure.
I may have added it wrong. Let me just try it again.
Mm-hmm.
Oh, 16,785.
Okay. Thank you. All right. So let me hear from Mr. Marshall. Tell me what you did on the bank balance side.
So the balance starting was $8,788.
Mm-hmm.
Then I would have added two deposits, one being 3,450. The next was 6,521. Came to a total of 18,759.
Mm-hmm.
Then I subtracted the outstanding checks, one with the value of 1,260 and $714, which brought me to a total of 16,785.
Okay. Thank you. All right. So we have it balanced then at $16,785 for our reconciled balance. Okay. So that essentially then will cover what we're going to be looking at in chapter 4. And so you'll have a few of those questions to do for homework. Chapter 4 homework, page 111, 113. Let me see. Yeah, questions 1, 2, 4. Yeah. Okay. So okay. So now we are supposed to go on to another chapter, which would be continuing along the same topic in a sense. We're also supposed to have test number 2 today. So I will give that to you, of course, after the class. And you will have today's Thursday. Tomorrow is Thursday. So you have till tomorrow, tomorrow evening, Thursday evening, to return that to me, because I want you to print it and write on the printed copy. I know some of you will have to do it at work, so I'll give you the chance to do that and try and see if you can get a good copy of it sent back to me, because it's a little hard to mark the paper when you do a small picture, and when I try to print it, then it becomes pixelated. So try to get a good copy. If you can't scan it, try to get a good copy of it. So when you take a pictures, make sure the page covers the whole screen. So when I try to enlarge it to mark it, then it doesn't get too grainy, because I think one or two of you, when I tried to print it, it got very grainy because the picture was kind of tiny. Okay. So the next section we want to look at is chapter 14, which involves an aspect of what we do, I guess, under the general term banking. We're not doing the whole of the chapter, we're just doing a portion of it. And so on page 355 is where we begin for this chapter. And you will see some terms referring to what is called a revolving charge account. Okay, so you'll see it in the blue, it says revolving charge account allows buyers open-end credit up to a maximum credit limit. Some banks would refer to it as, I guess, a line of credit. So you can use that account to purchase whatever once you stay within the maximum amount. It's sort of like a credit card, but when we often talk about revolving charge credit, is usually something that you would these days, a lot of banks don't offer it. They only probably offer it to businesses, but when you go to certain companies, they will allow you that charge account. So you would just purchase from that particular company. Whereas with a credit card, which uses the similar principle, you can use a credit card wherever credit cards are accepted. But the revolving charge account is often limited to particular businesses where they give you a certain amount of line of credit where you can purchase. Once you reach your max, you would have to pay down on it, and then you can make further purchases. Now, this Fair Credit and Charge Card Disclosure Act is something that is a US law. I'm not sure if we have an equivalent here, but basically it is a law requiring institutions that give credit to give the full terms of the credit to the client so they could be knowledgeable about what they're getting themselves into. Okay, and now the other two sections there basically covered some of the things we used earlier. So it says interest charges are based on the interest rate times the previous month's balance, which is your outstanding balance. And then payments are first applied towards the interest and then the outstanding balance, which we refer to as the US rule. I think when we were doing simple interest, we looked at that where the interest comes out first, and then whatever is left from your payment goes to reduce your balance. Okay, and so we have on page 356 a scenario where this person has a revolving charge credit. Their limit is $10,000, and they decided to use that credit, and this is for a furniture store, right? Okay, so they decided to use the line of credit, and they purchased some furniture in the amount of $8,000. And so they have a certain amount of period to pay. And what they decide to do is to pay on a monthly basis. And if you look at the table, you'll see what is their monthly payment. You can deduce that from the table. What's the monthly payment in this case?
$500.
$500.
$500, okay? And the interest rate is
15%.
15%.
1.5%.
1.5%. On the table, it shows 1.5%. Okay. It says many stores require $10 or $15 or a percent of their outstanding balance. But the interest rate in this case is actually 1.5% per payment. Okay. So they show you now how to work out the outstanding balance. So you start off with your $8,000, which is what you purchased the items for. Now, because this person has a $10,000 limit, they could still go back in and make additional purchases up to $10,000. But of course, that will affect their payment. And so what they do is each month you have to pay $500. But when you pay in that $500, not all the $500 is going to go towards reducing your balance, because you will notice here the balance at the end of month one is 7,620, but the payment was actually 500. So if the payment was 500, the balance actually should be 7,500. But why is the balance not 7,500?
Because they took out the interest first and then put the remainder to principal.
Right. Okay. So what the bank or the company does is they find 1.5% off the $8,000. So the working is right here. So 1.5% in decimal is 0.015. So when you multiply 0.015 times 8,000, you'll get $120. And so that 120, you're going to subtract it from the 500. That 120 is going to the company as interest. And then when you subtract that from the 500, you're going to be left with $380. So that all of that payment that you made, that $500 payment, $380 will be used to reduce the amount you owe. So you subtract $380 from the 8,000, and that's how we get $7,620. Okay, so at the beginning of month two, this now is your starting balance. You no longer owe 8,000, you now owe $7,620. Okay, so now what's going to happen for month two? What's happening there? What did they do?
Calculate the interest for
Okay.
month two's payment.
Okay, so that's going to be 1.5% of the $7,620. So that's why you see this 0.1015 times 7,620. And that gives us $114.30. So your interest is a little lower this time because you have a smaller principal. So you're going to take that $114.30 from your $500 monthly payment, and that's going to go to the company for interest, and you're going to be left with $385.70, and you're going to use that now to reduce your principal, and so your principal now becomes $7,234.30 when you subtract the $385.70 from the $7,620. And so each month you continue that process until you owe no more, okay? And so the next payment period, which would be month three, you're gonna now find 1.5% of the new principal, which is $7,234.30, and you continue the process, okay? And so that's basically how you would pay down on a revolving charge account. So I'm going to ask you to do this one. This one involves just wanted to do the first 2 months. So it says calculate the balance outstanding at the end of month 2, given the following. You purchase a desk for $600. You're going to pay back $40 a month, and your interest rate is 2.5% on the unpaid balance. By the way, what is 2.5% in decimal form?
$0.025.
0.025. Okay. So go ahead and work it out for the first 2 months. I give you 2 minutes to do that one.
Mr. Allen,
Hello?
I have a question.
Mm-hmm. Go ahead.
The beginning balance, it didn't specify a balance.
Okay, the beginning balance would be, in this case, 600, because that's what you started off with. So right here, you'd put 600, and you go from there. That's what you wanted to know?
Yes.
Okay. Okay, Atia, roll. No, sorry. What you got for the interest for the first payment?
Open bracket 0.025 times 600. That will
Mhm.
give us $15.
$15, okay. And your monthly
The amount
payment is
$40.
$40. Mm-hmm.
The reduction will be $25.
Mm-hmm.
And the outstanding balance will be $575.
Okay, $575. Thank you. All right. Let me see. Let me see. Okay. Okay, Ms. Roll, you want to give me the second line?
Okay, so the outstanding balance due would be 575.
Okay. Mm-hmm.
The interest payment would be $14.38.
Mm-hmm.
Monthly payment is 40.
Okay.
Reduction in balance due is $25.62.
Mm-hmm.
Outstanding balance due is $549.38.
Okay. All right. Thank you. All right. So, and then if you want to go to the next month, then you're going to start with Mr. Marshall. What would you start with for the month 3 if they ask you to go to month 3?
Outstanding balance would be the $549.38.
Okay. And then you would do what with that afterwards?
Then you're going to times that by 0.025.
Okay. Okay. And then you subtract from the 40, and then you subtract that from your outstanding balance, and you continue the process.
Yes,
All right. So that's the process for what they refer to as a um, revolving charge account. Now, the process for doing credit card payments is a little different, and you will see the steps on page 357 of your book. But it makes more sense when we actually um, do an example of it. Okay. So with the credit card, because it is something that is people use more at whim, and some people use probably almost every day. Um, the process is not as straightforward as when you do the revolving charge account, because with the revolving charge account, we often only go to some of those companies occasionally when we want to make significant purchases. But the credit card, you can make small purchases or large purchases, and some people use it instead of cash. So what they do, they have something they refer to as your daily balances that they use to work out your average daily balance. And from your average daily balance, they get the overall cumulative balance. And for each month, once they find what your average daily balance is, then they charge you your finance charge based on that. Okay, so you see the 5-step process. And so we're going to look at an example here. And so this is just a small, of course, the statements are usually more involved, but we just want to get the process. So we're not going to go into a more involved statement. We just want to get the process and understand how it's done. So this small statement here says that this bank, for the most part with credit cards, you have a monthly billing cycle. So if you look at the top here, it says this one is a 30-day billing cycle. And so they start off by telling you what your opening balance is and the date for that. And then each time a payment is made or a charge is made, they have it recorded. So you have 1, 2, 3, 4 transactions on this small credit card statement. So they give the date, what the transaction was, and how much it was for. So you will see in working it out, they have a column, number of days of current balance, the current daily balance, and the extension. So we started off on the 20th of June with $450 as your balance. And so on the 27th of June, you made a payment, and that payment was for $50. You paid the credit card, you paid $50 on the credit card. Okay, so what you're going to do now, you're going to say, okay, if I start at 450 on the 20th, from the 20th to the 27th is how many days? It's 7 days. So that's why we have that 7 days. So we had the 450 in the as our balance for 7 days. So what they did is to multiply the 7 times 450, and that's what gives us at 3,150. Okay. So we made a payment. What's this saying here? Billing date is 450, and we made a payment of $50. Okay, so the payment then is going to reduce your balance to 400 if you made a payment. So you see 400 as the balance, because when you make a payment, you're not going to owe the company 450 anymore. Your balance is, you're going to now owe them 400 because you made that payment. So that's why they subtracted the 50 from the 450. Okay. And you next, you're going to check to see now when is the next transaction after that. So it was the 20th to the 27th is 7 days. Then the 27th, the next transaction was 3 days after. So that balance would be in your account for 3 days. So you're going to multiply that 3 times 400 to give you 1,200. That's how we get that 1,200. Now that next transaction was a charge of $200. So you bought something at JCPenney for 200. So now your balance now will go up by 200 because you purchased an item. So 400 plus 200 gives you 600. And so from the 30th of June, you want to see how many days you had that as your balance. You go from the 30th of June to the 9th of July. So 30 days of September, April, June, and November. So June has 30 days. So the 9th of July would be 9 days after the 30th. And so that's why you see this 9 here. So you kept that balance for 9 days. So you're going to multiply the 9 times 600 to give you 5,400. Then you made a payment of $40. Okay. So if you have made a payment, that means your balance is going to go down by 40. So instead of owing 600, now you're going to owe 560 because you paid $40 on it. So 560 is your amount that you owe the credit card company. And you're going to look now from the 9th to the 12th is 3 days. So you kept that in for as your balance for 3 days. You didn't do anything for 3 days. 3 times 560 gives you 1680. So you did no more transactions. So you're going to check to see now, this billing cycle is for 30 days. You still have some time in the month. So you notice they put 8 here for the rest of the month. So how you think they got that 8? Any suggestions how they got the 8? Because we had no more transactions after the 12th of July.
That was the end of the billing cycle. That's 8 days
Okay.
after the last transaction.
Okay, but how did you get the 8? That's what I'm asking you. Why did they put 8 there? Why didn't they put 9 or 10 or 11 or some other number? Why 8? How many days in the cycle?
30.
And how
Wait,
many days have we done transactions for so far?
22.
22. So you're going to add the 7 and the 3 and the 9 and the 3. You get 22. And then you subtract that 22 from your number of days in your billing cycle, which is 30. And so that's how they arrive at the 8. So the last 8 days, then your amount would be 620 because you did a cash advance. If you do a cash advance, that's going to add to your credit card. You bring it, boosting it up. So it was 560. Add $60 to that, becomes 620. And so for 8 days, your balance is 620. So you multiply 8 times 620, and that's how you get that 4,960. Okay, so now you're going to add up all the extensions to find out what your overall daily balances were. And so when you add it up, you see they got $16,390. And then you work out your average daily balance by dividing that by the 30 days in that billing cycle. So 30 into 16,390 is $546.33. So that is your average daily balance for that month. And based on your average daily balance, that's how they're going to work out the interest that they're going to charge you for that month. So this bank is charging 1.5% interest. So to find out how much you're going to pay for interest for that particular month, you're going to multiply your average daily balance by the interest of 1.5%. And in this case, it works out to $8.19 for that month. Okay. Any questions with that? I guess it's straightforward. Yeah. Okay. I didn't see anybody. So let's move on then. Since it's straightforward, I'm going to look at this one here. Okay, this one says calculate the average daily balance and finance charge from the following information that follows. Okay, this one has a 31-day billing cycle. What is the interest rate per month?
2%.
2%. All right, now what I kind of like to do with these questions to make it a little easier to follow is just deal with the current daily balances first. So you start off, what's the starting balance?
$210.
210. So we start off with 210. Okay, so you could do that. And then you look to see, it says you made a payment of $50. If you make a payment of $50, what's going to happen to your balance?
Decrease.
is going to decrease, okay, by 50. So it's going to become what?
2.6. Sorry.
You start off with 210, you make a payment on your card of $50. So what's going to be your
160. Sorry, 160.
okay, $160. Okay. And then the next, you made a charge. You bought something at Staples for $30. So what will be your new balance?
130.
You made a purchase now. If you had $160 that you owed the bank and you purchased something for $30, how much will you now owe on your credit card?
It go up.
$320.
Sorry.
$320.
Why you said 320? Remember we start off with
One.
200. We start off with 210. We made a payment on the card. So what you owe is going to go down to 160. Then you
198.
bought something for $30. Okay, so if you bought something for
Yeah, it's
$30,
190.
yeah, you're going to now owe 190. Then you made another payment of $10. So if you pay $10 on your card, how much you now owe?
180.
180.
180, okay. And then you do the cash advance of $60. So how much you now owe? If you took out
240.
240. Okay. So once you do that, so you work out the different daily balances, then you're going to go back now to deal with the days. Okay. So the first, you start off on the 20th to the 27th. How many days we looking at?
7.
7. Okay. So you're going to 7 days. And then from the 27th to the 31st.
4.
Okay, that's 4. Okay. And then from the 31st to the 5th.
5.
5 days. Okay. And then from the 5th to the 10th.
5.
5 again. And then, okay, and then we have to figure out how much more time is left.
10 days.
10.
10. Okay. Because our total is supposed to be 31 days for this billing cycle. So all these 5 numbers should add up to 31. So now that we have worked out our daily balances, we have worked out the days for each, now we're going to do the extension. So we're going to multiply 7 times 210, 4 times 160, 5 times 190, 5 times 180, and 10 times 240. So what is 7 times 210?
1470.
1470. Then 4 times 160.
640.
640. Then 5 times 190.
950.
5 times 180.
900.
And then this one would be 2400. So now your total of your extensions would be what?
$6,360.
Okay, 6,360. So now we want to find the average daily balance. So to find the average daily balance, then we're going to say 6,360 divided by how much?
31.
31, because we have 31 days in this cycle, and that works out to
205.16.
205 and 16 cents, I hear. Okay.
Yeah.
Yes.
Okay. So your finance charge now, because it's 2%, you're going to say $205.16 times 0.02. So tell me how much interest you're going to pay for this month.
$4.10.
Okay, $4.10. Okay, very good. All right. So I got another one for you. You can do this on your own. So we have another one that's 31-day cycle. Interest rate is 2%. They give you a few transactions there. So I suggest you do the daily balances section first, then you deal with the days, then your extension, and then you go from there. So I'll give you 3 or 4 minutes to do that one, and then we move on. Okay, let me see. Mr. Marshall, could you tell me what your various daily balances are?
Started off with 400,
Mm-hmm.
then I went to 300. I would have minus the 100. Then I went to 360 when I added the charge to
Mm-hmm.
Staples. Then I went to that would have been 360 with the charge and Staples. Then the payment of $20 brought me to 340,
Mm-hmm.
and then the cash advance added would have brought me to 540.
Okay, thank you much. All right, so we start at 400. We made a payment of 100, so we're going to reduce some amount to 300. We made a purchase, so we're going to increase to 360. Payment reduced by 20. All right, looks good. All right. Let me see. Miss Heald, tell me the different. Let's go down the days now and tell me what you have for the days column.
3,
Mm-hmm.
7,
Mm-hmm.
5,
Mm-hmm.
5,
Mm-hmm.
and 11.
11. All right, thank you. Let me see. 3, 7, 5, 5. Okay. And total should be 31, 10. Okay. All right. Miss Roll, could you give me the extensions? Miss Roll, are you there? Miss Daniel Roll, are you there? Okay, Miss Knowles, do you tell me what the extensions are?
1,200,
Mm-hmm.
2,100, 1,800,
Mm-hmm.
1,700,
Mm-hmm.
and 5,940.
Okay.
And the total would be 12,740.
Okay. Thank you. Miss Roll, are you back?
Sorry, hi. Yeah, I was in another one. Sorry.
Okay. Yeah. I want to know what your average daily balance work out to.
I didn't finish. I had to step away.
Okay. But you see our extension added up to 12,740. We had 31 days. So tell me how you're going to work that out
Give me
to get the,
So we'll divide the 12,740 by the 31. 31
Mhm.
days.
Yeah. And what do we get?
Give me 140. 410.97.
Okay. And so our finance charge now, how would we find that if it's 2%?
Okay, so we would times 410 by 0.02.
Okay, and that gives us
97 times $8.21. $8.22.
22 cents. Right. Thank you.
Okay.
All right. So that basically covers the that chapter, that portion of the chapter that we'll be looking at, calculating the average daily balance and then your finance charge for the month. Okay. All right. So for this section, the homework will be based on pages 366 and 368. Those pages. Okay. So I'll send the PowerPoints to you in a couple of minutes. Also test number 2. And like I said, with test number 2, I need you to print it, write on the printed copy. Then you could either scan it back or take a picture, send it to me by end of tomorrow. Tomorrow is Thursday. Yeah. And we go from there. We meet again on Saturday. And we won't have a Wednesday, Thursday next week, but we meet this Saturday. Okay. Any questions? I guess not. All right. So I will see you again, or God's willing, on Saturday. And try it as much as possible to see if you get the practice in for the homework. If you haven't sent me today's homework as yet, please do so I could record it as completed. And I will see you on Saturday, God's willing. Bye-bye.